There are critical times ahead for the United States and the world. We have fear, uncertainty, and doubt keeping people out of Bitcoin and cryptocurrency, and all this forking around isn't helping either. But in current financial events that no one is talking about, the United States debt ceiling has not been raised yet. And with legislators only in session for about 10 more working days and extraordinary measures being exhausted, the U.S. Treasury is warning everyone of catastrophic consequences if the United States defaults on its debt as early as late October. So what is the United States debt ceiling? What does the U.S. Department of Treasury say about it? And how is all of this connected to protecting your family and your community with Bitcoin? Let's discuss. Hey everybody, I'm Gary Palmer Jr., you're you, and together, welcome to Minting Coins. So there is a ton of information coming out. There's a ton going on. I hope everyone is paying attention to what is happening with Bitcoin and all the additional projects in the cryptocurrency space. This is an interesting industry. This is an exciting industry. There's a lot going on, and it is just so much information to parse through and to put together and to figure out what to bring to the Minting Coins audience. It would be better if we were producing 5 shows a day. The difficulty with producing 5 shows a day, even when each show is about a half an hour long, is that a half an hour long show probably takes 2.5 to 4 hours of prep time in terms of the research and the production and the setting up, and really that's before you get into the post-production and everything that it takes to then upload that video and then syndicate that video. It's just a lot of work, and I really appreciate people tapping that like button, people subscribing, and people helping support this station, this channel, because this is just an incredible amount of time and work to bring this information, to gather it, and but at the same time, it's something that I am happy to do. It's something that we are enjoying so much because we just love Bitcoin, we love Ethereum, we love cryptocurrency and blockchain technology. This is revolutionary in terms of the implications for each of us. This is the first time that we have a peer-to-peer distributed form of trust, electronic cash of messages and information, where we no longer require third parties to help us validate what the information says or what the information is that's being exchanged. And I think that in today's day and age, it can be really easy to take what we have for granted. It's really easy to take the internet for granted. It's really easy to take Bitcoin for granted. But before we had Bitcoin, it was really, really difficult to purchase something online. And before we had online, it was really, really difficult to get a message from even your city to a city just a few miles over. Long distance calling could be very, very expensive for a huge portion of the population. Those long distance charges really, really added up. And in today's day and age, I think have all experienced in first world countries that the banking fees and the banking charges and the ATM fees and the overdraft fees and all of these fees really, really add up. And it's just not the reality anymore with the Bitcoin, the blockchain technology. And there's going to come a point when the blockchain technology is so integrated with society that people are, perhaps taking all of that for granted as well. Bitcoin and blockchain technology came out of the financial crisis that was in 2007, 2008, when we had the housing market crash and the great recession, the largest one-day drop in the Dow Jones since the Great Depression, and just a huge economic collapse. Not really a huge economic collapse, but it was definitely huge economic devastation and destruction for millions and millions and millions of people in terms of their savings, their 401k, their retirement, their housing, mortgage, their loans, their employment. A lot of people lost everything. And from that devastation, from that destruction, I think it's really important for us to remember and for us to understand that the phoenix that rose from those ashes, which are still burning today, was Bitcoin, was the blockchain technology. It was the solution that came out of the Occupy Wall Street and the frustration with the banks and the too big to fail sort of institutions that were in this cycle of pumping the economy and then dumping the economy and then repumping the economy, while the people that lose are, the common investors that just don't know any better and are just trusting the full faith and credit of the currency that they're giving their blood, sweat, and tears for. So with that being said, Bitcoin is really, really interesting for all of those reasons. And Bitcoin has potential to really save the world. This is I see it as the new economic safety net for the majority of people in the world for the if and when there is the next major economic collapse, economic struggle, world, sort of issue that really puts a dent into the full faith and credit of a country's currency when those sort of, financial Armageddon level events happen. Financial Armageddon level events, just like what did happen in 2007, 2008. Because without the bailout that happened, and without all of that money coming in and supporting the institutions and the financial institutions and a lot of the organizations that were that were all about to crumble, this whole house of cards was all about to come down, and the bailout really saved all that. Otherwise, it would have been the major financial crash that people are talking about, that people are expecting, at some point in the future, because the U.S. dollar is just Keynesian economically based. The U.S. dollar is based on printing more U.S. dollars, and that inflationary aspect is, can really spin out of control and create a hyperinflationary currency, which, turns the price of milk, instead of turning the price of milk from $3.25 a gallon to $4, it turns that $3.25 gallon of milk into a $30 or a $50 or a $100 gallon of milk. And that is not a situation that any country wants to see, and that's not a situation that anyone in America wants to see either. So, we've talked about this in different ways in the past, but there's different, nefarious ways that Bitcoin could have an accelerated path toward the moon. And gold bugs, know this as well, that, gold has this inverse correlation to the dollar, and that when, there's a war or when there's bad news in the world, that value of the gold goes up, and then the value of the U.S. dollar goes down. And that's also true with Bitcoin, except Bitcoin is, a stronger sort of vehicle for the world, because anyone can purchase it instantly, and, anyone can store it very, very securely, and it doesn't have sort of the weight issues and the transportation issues or the country cross-border exchange issues that Bitcoin doesn't, have. So, where does that bring us to? And so if there was a major economic issue, then the value of Bitcoin could accelerate much, much more. And we're seeing this exact sort of scenario play out in different countries around the world that are experiencing hyperinflation. that, most people in the world, they're in their country at least, that are experiencing the hyperinflation, let it be Greece or Venezuela. The people who don't have Bitcoin are having a very, very hard time making ends meet, working and having enough income from the hours that they work to pay their most basic needs of survival. And that's not including when you get to the cost of housing or the cost of transportation. Just the cost of food and heat alone is much, much more than what they have coming in. But the folks that have Bitcoin, those are the people who are able to make ends meet. Those are the people who are creating a system of surviving for their families and for their communities. And so I guess where this is all going is that a lot of people in America, they really don't see the problems or the issues. Sometimes there's a disconnect with the empathy or the compassion that other people in the world might be having. The people in first world countries are really struck with first world problems, and it's sometimes it takes a bolt of energy to bring perspective, which is sad but true, because I just would appreciate more of us coming together and more of us communicating this and more of us just sinking in on a common wavelength for us to communicate and for us to consciously create change, for us to consciously put the pieces together for us to push all of us forward and lift all of us up and closer to where we're all going together. But in America, we're not experiencing those issues. In America, we just have these first world problems, at least most of us. But there's scenarios in which America too could experience extreme hyperinflation. One of those scenarios of America experiencing extreme hyperinflation is with the U.S. Debt ceiling and the U.S. paying its debts, and what would happen if the United States defaulted on its debts. So maybe you've heard about the debt ceiling, maybe you haven't. Maybe you have politics on it one way or the other. I have had some strong feelings about it in the past as well. And without getting into my personal opinions on the debt ceiling and if it should be increased or if it should be decreased, one thing is for sure. If the United States was ever to not increase the debt ceiling, and therefore the United States was to default on the debts of the United States government, then that would create a situation of economic catastrophe, the likes of which the world has never seen, especially when you consider how evolved the economy and the society and the culture and the technology is. I think even if it was just as bad as, say, the Great Depression back about 100 years ago, it would comparably still be worse because of the ripple effects and repercussions it would have for everyone and for all systems, and the cost of transportation, getting things across the world. It would not be fun, especially with the luxuries that most of us are very, very used to, especially in the current economy, which is extremely, extremely strong. So there's some more for us to talk about. There's some more for us to go over. We're going to go into a little bit of depth about exactly what I'm talking about. We're going to look at the U.S. Treasury's website. We're going to look at some of the exact details that are happening in the news today, which have a direct effect on not just you and your community, but America and the entire world. So with that being said, why don't we pop into the market and then take a look at the news, and then let's discuss. So starting over at coinmarketcap.com, taking a look at where we are in the cryptoverse, we have the total market capitalization, which is still over $101 billion, 24-hour volume over $2 billion, and a Bitcoin dominance over 45%. So all systems look good, all systems look steady, all systems look strong, and we're moving forward. Diving a little bit deeper into those high-level numbers, we see Bitcoin, the number one coin by market cap, at $46 billion, and it's had 24-hour trading of about almost $790 million. Looks very, very good. So yesterday's video, we were looking at Bitcoin Cash, and I was mentioning how it looked great to see Bitcoin Cash overtake Ripple. Nothing that I have a lot against Ripple. It is more of the banker's coin, right? And so the Bitcoin is interesting because it's the decentralized peer-to-peer coin. So, but that no longer happens because now that people are able to access their Bitcoin Cash, now that the miners have started to catch up with how much Bitcoin Cash they're mining relative to the difficulty that Bitcoin Cash just started with. People are receiving their Bitcoin Cash, but now they're dumping that Bitcoin Cash. At least from the past 24 hours, we have a drop of 21%. So that's put Bitcoin Cash underneath Ripple, but it's still at a healthy $5.7 billion. Still, the number 4 coin on this list, and we will see where it goes from there. I suppose with both Bitcoin and Bitcoin Cash, they are both limited to 21 million coins. Neither one of those has inflation, and so in that respect, both of these coins seem a lot stronger than the US dollar. The US dollar has a really interesting sort of history, and we're not going to get into how the dollar works and where it came from and how that first card was, laid on the table. But the cards have been building up ever since. And what happens in America, what happens in American finance at the highest levels of our government, and what happens in politics is that every so often, I'm not exactly sure how often it is, but every so often there is the debt limit. And so turning over to the part of our news and getting into the treasury.gov website, talking about the debt limit page, we have this debt limit that's a part of finance and a part of government, like we're talking about. And this is, this is legislation that requires approval from the government to increase this debt ceiling, this debt limit, how much total amount of money that the United States government is authorized to borrow to meet the existing legal obligations, including things like Social Security, Medicare benefits, military salaries, interest on national debt, tax refunds, all sorts of payments. The debt limit is the total amount of money that the U.S. is authorized to spend. And so the Treasury needs the legislation and the President and the Senate to all agree on a bill to increase or redefine the debt ceiling and the debt ceiling limit. And so turning to this page on the treasury.gov website, this part here in red, the treasury.gov is very direct, and they're letting people know failing to increase the debt limit would have catastrophic economic consequences. And why is that? It's because it would cause the government to default on its legal obligations. And so this would be an unprecedented event, because this has never happened before. The United States has never defaulted on the debts of the United States. We've come close, and because of that, we've shifted from being a AAA rated country, the highest level of financial creditor trust available, and we've had that rating drop to a AA rating. But with that being said, if we didn't pay our debts as a nation, then the most credit-worthy nation in the world would then no longer be the most credit-worthy nation in the world. And so the Treasury is letting us know that what would precipitate would be another financial crisis and threaten the jobs and savings of not just Americans, but everyday Americans. Why everyday Americans? Why do they put it like that? Well, that's because the banks would be in so much trouble that all the people would be you know, capital screwed. When I say capital screwed, I'm talking about financial capital. Not a good situation to be in. This is the way the system is set up, and Congress has always acted when called upon to raise the debt limit, this debt ceiling. You know, since 1968, they have every single time, even under, you know, bitter sort of circumstances, let it be Democratic presidents or Republican presidents, they've always increased this debt limit. And so what's going on right now? So what's going on right now is that we see here on the treasury.gov website that there's this one PDF that has a description of the extraordinary measures that the Treasury is taking in order to help the United States government meet our debt, meet our financial obligations. If you have a household, if you have debts, what happens if, you know, there's a loss in income? Somehow you gotta, you know, unfortunately rob Peter to pay Paul. That's, you know, how it sort of works in my house, where there's not enough money to pay this important bill. Well, this other important bill isn't going to get paid. And so things are being shifted around. This execution of extraordinary measures is a measure, or measures of last resort. And it's, you know, it has gotten to this point before, but this is important because the terminology is key, right? We talk about this all the time on this channel. We talk about this all the time on this show, that definitions are important because the systems and the layers, the infrastructures of institutions, of government, of finance, of technology, it's all based on these different definitions and semantically how things have meaning, right? This is the basis for computer programming, and that's before you even get into concepts like, you know, artificial intelligence, right? But we're not even talking about that. We're just legalese wise in terms of the debt ceiling and what's happening with the Treasury and whatnot. A step in the process is for the Treasury to enact these extraordinary measures. And so let's go a little bit deeper into some of that and what that means. So turning over the Wikipedia, we're looking at the page for the United States debt ceiling. So again, the United States debt ceiling is this debt limit, this legislative limit on the amount of national debt that can be issued by the United States Treasury. So the United States Treasury has their hands tied how much national debt that they can issue. They can't just print as much debt as they want. They have to go through the legislative process of the House of Legislation, the Senate, and then the President. And so down here, this part in red, that when the debt ceiling is actually reached without an increase in the limit having been enacted, then the Treasury will need to resort to extraordinary measures to temporarily finance the government. And so the debt ceiling has actually already been reached. And so this is sort of like a major step, right? And so technically the debt ceiling on paper was already reached. And so now what they're saying is that they're moving things around to go through these extraordinary measures to temporarily, change things around to finance the government expenses, because if the debt ceiling was actually reached and there's no way to pay the bills, then that would be very, very, very bad. We'll talk about that a little bit more. So again, this part in blue, the Treasury has never reached the point of exhausting extraordinary measures, resulting in a deficit. So let's see here. So defaulting on financial obligations. So what would happen? So at that point, that the debt limit ceiling is reached, if and when that point was hit, because if the legislation acts in time before we default on that payment, and they increase that ceiling before then we won't hit the ceiling, right? But there's a first time for everything. There's a first time for anything. And hypothetically, if in a few months the debt ceiling isn't increased, then what would happen? So what would happen first is that the United States would cease to make payments, payments for all the things we talked about above, and that includes interest and loans and national debt. The government would not have the resources to pay interest, and then a default may affect the United States sovereign risk rating and the interest rate that it would be required to pay on future debt. So not only would this capital screw you and your family, but this will capital screw your children and your grandchildren and your grandchildren's grandchildren for essentially ever, because the interest on these loans of the new roads and bridges and the health care of tomorrow will just have such a high interest rate that people will have to deal with that for just generations and generations and generations. It's a really, really scary prospect to be living in a country that has the interest rate raised so high that the government can't afford to pay its people, pay for basic public services, pay for the military, pay for the national health care, to pay for the schools, to pay for the roads and the bridges, to pay for communications, to pay for research, to pay for arts, to pay for all of these critical infrastructure needs. Yet this is what's happened to several different countries around the world. And if and when the United States, through the political drama of the Democrats and Republicans, through the political drama of the U.S. legislative side versus the executive side of the governments, or let it be because of one person that has the power to disrupt things in the middle, it would not be good if this happened. And it's important for us to keep an eye on this and to keep an understanding of this, because this is a leading indication for you to give yourself a heads up. So if you hear what's going on, you know directly not only how this is going to affect things as most of the world understands it, but you're also going to understand how this is going to affect Bitcoin as we understand it. So moving forward, taking a quick peek at this this PNG from Wikipedia. This is the graphic of the U.S. debt ceiling in trillions of dollars since 1981. And so, yeah, we have big numbers over here. So this was when we had President Reagan, Bush 1, Clinton, stayed very low for a while. And then we had Bush and Obama, largest ever. But this also was after what happened in 2008. And so after 2007, 2008, a lot of this debt right here came from the bailout. And so that's one of the reasons why it's sort of it has ballooned so recently. That, as you can imagine, I would imagine that there's compound interest on this debt, and so the compound interest on the debt is just going to increase that debt even more, even quicker. It's definitely not. This is the trend you want to see with a cryptocurrency or a stock portfolio. This isn't the trend you want to see with your personal debt or with your nation's debt. And so let's think about this. So what's going on right now under Trump is that we've already reached the new debt ceiling, and now we've already increased the debt ceiling again, and now we're in a position where we need to increase the debt ceiling yet again, as we have 60 plus other times. And this is forever gonna get increased and increased. And the year that they are unable to increase the debt ceiling, that's going to be not a good year for the dollar, and for better or for worse, that's going to be a great year for Bitcoin and a great year for cryptocurrency. Cool. So I just wanted to turn to a couple of recent articles just for us to get an idea of what's going on in the mainstream media about this topic. And so first, turning over to CNN Money, we have here that with the United States could be at risk of defaults as early as October. And so before they were saying, I don't think it was actually this article, but the Treasury Secretary was saying, months ago that we were going to definitely be able to pay our debts until the beginning of September. And so that beginning of September has now gotten pushed into the beginning of October. And definitely by late October, the debt ceiling needs to be increased. Otherwise, serious economic, catastrophe, yada, yada, yada. So again, the Treasury might be at risk of defaulting on some payments in the first half of October. And currently, just so you guys know, the legal borrowing limit is set to a ceiling limit of 19.81 trillion. And that was set since mid-March. That's when we reached it. We reached that debt ceiling in mid-March, right? So we're way beyond that, and we're already going through those extraordinary measures, and now we're really hitting the edge of the cliff. Again, here, this bit in blue, the Treasury has been using special accounting measures, otherwise extraordinary measures, to allow the government to continue borrowing money. And that by the CBO's estimate, that this is going to be tapped out by early to mid-October. Again, they were saying September, now they're saying October. Maybe that means we have as soon as early November. But wow, this really, they were really stressed out about this. When you go through all the quotes and what everyone is saying about this, they know this is a big deal. If you guys paid attention to the news in 2008, we all know that they're really serious about these banks not failing and about there being enough money for the United States to pay its bills. Having your credit go from an 800 to a 500 would not be good. It would cost you a lot of money. If that happens to the nation, that's going to cost the nation and every citizen and every business in the nation a lot of money. So again, this is when the Treasury Secretary Stephen Mnuchin was saying that he was comfortable saying that they can fund the government through the beginning of September. And now the CBO is saying beginning of October. And they're just saying, again, Congress should act quickly and urging the lawmakers to act before they leave for the August recess. It looks like the lawmakers are not going to make this change before the August recess. And time is limited because, the beginning of November, this is August, September, October, November, we have 3 or 4 months away from this time right here. But turning over to this other article from the Washington Post, between now and the original debt ceiling limit deadline of September 29th, the House is only in session for 12 days from when they wrote this article. So really about 10 more days that the House is in session, 10 more working days. I wish I could work 3 or 4 months and have, just 10 working days. But, that's the situation. So they have to do this while they're working. They have to get this all done on their side within one of these, 10 to 15 days if they have some breathing room in there. And this is a really interesting article because this, if you scroll through this really shows the whole schedule, which is difficult to read, but it shows when both sessions are in, when it's just the House, when it's just in Senate, or when it's neither. And so you can sort of put this together to figure out yourself how many days left, or if you're interested in when Congress is in there and when actually they have working days to get things done. But it's really, really interesting. And so what does this mean? How is this related to Bitcoin? How is this connected to protecting your family and your community? Well, I think the basis of it is already pretty clear, and we already talked about it a little bit earlier just now. But putting it into visual perspective, I have this graphic here where I like to show people, and this might not be in perfect proportion, but people are wondering if it's too late for them to get into Bitcoin. They're wondering if Bitcoin is too big for them to get into. And they just know people are buying in, buying out. There's a lot of trading that's going on. But if there was a major economic situation, if there was a major geopolitical situation, if there was some sort of military threat with the major militaries of the world, that'd be the United States, China, Russia, so many different situations, there can be, or even none of the above, just there's some sort of technological consciousness awakening or epiphany of business people or masses around the world that, just hockey stick Bitcoin, straight up to the moon. So it could happen naturally or consciously. It could happen because of a trigger like the debt limit not getting increased. But looking at this graphic right here, this is a representation of the total value of Bitcoin at $41 billion. I know this is a little outdated. And so if this is Bitcoin at $41 billion, it might seem a lot of money because $41 billion is. Larry Page and Bill Gates, they're rich people. Bill Gates is listed here at $86 billion. And you have companies like Amazon and Apple that have, it says here Apple has $730 billion, at which $730 billion, I mean, that's about 690 billion more than all of Bitcoin, right? And then you have, according to this, all USD in circulation, 1.5 trillion. Really interesting, right? Just the USD in circulation, but then all physical money, 31 trillion, all the stock market, 66.8 trillion, all money in the world, knowing that not all money is created equally, you have 83.6 trillion. So it's really interesting. I guess is there real estate in here? I mean, real estate is a kind of money as well. And so when there's real estate money, there's fiat money, there's money in stocks, there's people's personal wealth and investments, there's all sorts of physical and precious metals, stocks, bonds, liquidities, all of this type of money that can be shifted from wherever it is now, wherever it's connected to a US dollar, a US petrodollar. And then if people were antsy, or if there was risk of the US dollar losing value, then we could see a sudden shift of those US dollars or those world currencies. Because really, if the US dollar falls, it's really a world problem. All currencies would probably have a huge amount of suffering. The world is super interconnected, right? So a lot of fiat currency we would see shift, I believe, into the cryptocurrency space. And then the people with the, and then the value of those cryptocurrencies increase while the value of the dollars decrease. And then all the people that don't have Bitcoin and cryptocurrency, they're making $100 an hour, but it's not really helping because a gallon of milk is $200. And then the people that have Bitcoin are they have the money that has value, right? They have the World War II version of gold when there's just German marks just littering the streets, right? And so it's really all interconnected. It's really all interesting. And the reason why I'm just bringing this to your attention and we're making a video about this is because it's really, really important for everyone to pay attention to the debt ceiling. It's really, really important to understand that, you might have Republican friends or Tea Party friends or Libertarian friends or some sort of friend that just says, they shouldn't increase the debt ceiling. They should find other ways to decrease the debt. They should decrease the spending, or they should, decrease this, or they should decrease that. They should, decrease healthcare or military or whatever that is, other ways to decrease that spending. But if you follow, economics and finance, then it seems as if spending only increases and spending really doesn't decrease. And so with the increased spending, there's this increased debt that's just ballooning and ballooning and ballooning. And at some point, does this balloon gotta pop? And when that balloon pops, then at what point will the masses start, flowing their money into the cryptocurrencies? It's gonna be crazy. They're not even going to be able to access the servers. You think Coinbase is hard to access now when there's a spike in the price? No one's going to be able to access Coinbase. No one's going to be able to access anything, right? It's going to, people are going to be too busy trying to figure out how to get milk and water to even think about banks or Bitcoin, at first anyway. So it's just really, really scary, especially when you see what's happening in all these other countries. I just have a lot of compassion and a lot of empathy. And it's really horrible, the situations that people are living with all around the world. And it's really, really important for us to recognize that the perfect life that you might have, or the comforts of life that you may have, the routines of life that you have fallen into and that you've taken for granted over the past, few years or even the past few weeks, could be seriously disrupted. And when a person or a company or sort of any entity doesn't really predict the disruption, and when you're so rigid with your way of thinking and with your way of life, and something sort of catastrophic or something extreme happens, and you even know it's an extreme thing, right? It's just a debt ceiling. It's just important to recognize these cues and to be prepared. And that's why it might be interesting to start looking into Bitcoin, into cryptocurrencies. It might be interesting to not have those cryptocurrencies on an exchange, and to instead have those in a private wallet that just you control. And live life, prosper, be happy, celebrate your successes, celebrate your failures, kiss the people you love, give your friend a hug, and then also think about the ways that you can help your competition. Think about the ways that you can support, the people who you might normally think of as your enemies, or just people who you may be against, because ultimately we need our enemies thinking about helping us, and we need to be thinking about helping our enemies. I don't even like using the word enemies, but it's just about coming together and lifting up the entire community, because we're only going to get through this if we stick together. We're only going to get through this if we start paying attention. And we're only going to get through this if we are getting through this together. So with that being said, thanks for sticking around. Thanks for joining me in this video. Tap that like button. Subscribe if you haven't already subscribed. Check us out on Steemit. Check out the show notes below. Please give us some comments. I love your comments. I love interacting and engaging with everybody. And really excited about initiatives that we're working on, and the investments that we're making into the show and the channel, increasing the quality of our equipment, increasing the time commitment that we have dedicated into bringing information. And we just love doing it. We are really happy to have you around, and we can't wait to show you what we have coming up next. So until then, thanks for showing up, and I'm glad that we're minting coins.